This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 157. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@SNNwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. I'm very excited for this episode. As you see in the title, my guest today is Annie Duke. One of my earliest memories of watching sports, believe it or not, was watching the 2003 and 2004 World Series of Poker, seeing legends like Chris Moneymaker and Greg Raymer win the title. Then all the tournaments in between was just so cool. And all I wanted to do was play poker. Another standout amongst the greats playing these now televised events was, you guessed it, Annie Duke. Since retiring from the game in 2012, Annie is an author, corporate speaker, and consultant in the decision-making space. Annie's latest book, How to Decide: Simple Tools for Making Better Choices, was released in the fall of 2020 from Portfolio, a Penguin Random House imprint. Her previous book, Thinking in Bets, is a national bestseller. As a former professional poker player, she has won more than $4 million in tournament poker. During her career, Annie won a World Series of Poker bracelet and is the only woman to have won the World Series of Poker Tournament of Champions and the NBC National Poker Heads Up Championship, which, by the way, is on YouTube, and I highly, highly, highly recommend you go and watch some of her playing days. It's just, she's incredible. Prior to becoming a professional poker player, Annie was awarded a National Science Foundation Fellowship to study cognitive psychology at the University of Pennsylvania. Annie is the co-founder of the Alliance for Decision Education, a nonprofit whose mission is to improve lives by empowering students through decision skills education. She is also a member of the National Board of After School All-Stars and the Board of Directors of the Franklin Institute. In 2020, she joined the board of the Renew Democracy Initiative. Long story short, she's incredible, and I'm still wrapping my head around what I learned from speaking with her. So thank you again for tuning into episode 157 of the Planet MicroCap podcast, and please enjoy my conversation with the legendary, the amazing Annie Duke. Back, everybody, to the Planet MicroCap podcast. I'm your host, Robert Kraft, and I have a very special guest for me today. I mean, for everybody, but for me especially, because, look, Derek Jeter was my favorite baseball player of all time. I can't tell you the first game I ever saw him play, but for some reason in my head, the 2003 and 2004 World Series of Poker, those two main events, and then watching her play in countless YouTube videos and everything, like this is, I'm a little starstruck right now. So forgive me if I'm a bit goofy. I'm going to be goofy. It's all good. So with that, I'd like to introduce the soon to be Dr. Annie Duke. Annie, thank you for joining me today.
Thank you so much. That was, I'm not sure I can live up to the introduction, to tell you the truth. I'll see what I can do.
I think having prepared for this, watching pretty much every single TED Talk and Google Talk, and then actually your interview that you did with Jim and Jamie at Infinite Loops. Yeah, I'm not worried. I think we'll have plenty to talk. I mean, I love Jim. He's so great, and
he hit me with a big one, a big question at the end of that. He was like, if you could make any law, what would it be? And I was like, what? No, that was a really hard one, but I love him. He's so fantastic.
Well, he was trying to
really
support your upcoming, run for Congress, because
right.
right.
Yeah.
Yeah, we'll leave that right there.
Let's leave that one on the side right now.
So
Congress still exists.
I was joking with you offline, like this might be the most non-linear interview I've ever done because I have just so many questions and so many different places I want to go to. And quite frankly, just so many things I want to learn from you today. So I figured I'm going to start off with a fun question. I mean, these are all going to be fun questions. I try and make this is the most fun interviews anybody can do, but we'll, whatever. We'll see.
We'll see.
We'll see. So, I was telling you offline that, a number of microcap investors I've interviewed on here, their first careers were actually as professional poker players, not to, soon to be Dr. Annie Duke level, but, professional poker players nonetheless. And, or now are avid poker players themselves. So it's actually a very serious question that I have for you here. Are you planning on becoming a microcap investor? and do you really plan on breaking this trend? This is really important stuff.
This is, but so I'll tell you a story. So there's a lot of crossover between investing and poker, obviously, because poker is investing. And poker creates, I think, a really good training environment for investing. And I think particularly like for options trading, it's particularly good for that type of activity. But even like, if you're long short or whatever, I think it's very good for that because they're both, under extreme uncertainty. There's a lot of luck involved. So like how to deal with those feedback loops is actually quite difficult. You have to really learn to think in expected value because, any one trade can obviously go up and down. If you're, in these things, you tend to be trading small edges. So obviously we'd like to be grinding a 52-48 all day, but that means that 48% of the time, like we're going to lose, and we have to sort of deal with that and understand what that means. And it's a very hard skill to develop, and poker happens to be a really good place to develop it. So the story that I can tell you that's related to this is back in 2002, actually, I met somebody who was with a pretty large options trading firm, and that person wanted to hire me because they actually were really interested in recruiting out of poker. And part of their education program at the firm actually made the traders that they were educating, the new traders, play poker because they felt it was very important for this type of thinking. So back in 2002, we were talking about it. We got really far down the road with discussing me coming and trading options on the floor. We actually even decided that I would trade in Chicago, because it could Chicago, New York, Philadelphia. I think Dublin was even an option, Australia. Sort of thought about where I might want to be and had sort of settled on Chicago. And so I was very far down the line. And then all of a sudden poker was on television, kind of out of the blue. And I just basically said to him, let me just put a pin in it because I just kind of want to see what's going on with this poker thing and the TV thing. And obviously what happened with that poker thing and the TV thing was a pretty big deal. So I never did end up becoming a trader, but I was on the precipice of becoming a trader, not necessarily MicroCap. Obviously I was going to trade options, but I was going to go become a market maker, but I ended up playing poker and I never did do that. The funny part of the story is that I'm now married to that person who tried to hire me. So it ended up working out great anyway, and I'm very happily married.
Listen, there's still time for you to become the greatest microcap investor of all time.
Well, that's true. That's true. Of time. I sort of found my way back to finance anyway, because most of my consulting is in finance. So I end up getting to be in finance and help people with their decision making through that, and applying not just my cognitive science background, but also the poker background in terms of creating better decisions for people who are making tough decisions in these very uncertain environments. So I did get to do it. So I feel like I have the best of both worlds. I don't have the stress of actually actively trading, but I get all the adrenaline and the problem solving. And so I get all the good stuff that comes from it without kind of the downside that comes from it. I think I lived for 18 years, that's what I was doing. It's actually, as everybody knows, it's a pretty stressful way to make a living. And so I'm kind of happy to have found a way to prune the stress out of the whole process.
Listen, I think being a microcap investor gives a whole new definition of being on tilt, right? I mean,
right.
It's just, I mean, more so probably from a trading perspective. Actually, no, whether you're a trader or a long-term investor, I mean, one of the things I wanted to talk about today, because as I said at the open, I listened to your TED Talk about risk management to prepare for this, and I felt a lot of kinship with the idea of self-serving bias, especially when it comes to because most of the investors I have on here are that long-term focus. They don't really care about price. It's really all about, all right, well, how good is this business? And do I think it can appreciate in value in 5 to 10 years? So it's a lot of that question of like, should I sell? How do I hold? So I'd love to hear, your thought process on how to get yourself, how to build that mental model to get there where you can decide for yourself, I want to be a long-term investor, because that's the hardest thing for a lot of people, I feel like, to overcome.
Yeah. So if I understand your question, this is actually a topic that I've been thinking really deeply about lately, which is, I don't know if you're familiar with Angela Duckworth's book, Grit. The Power of Passion. I'm
probably the least well-read interviewer you'll ever meet, so I'm just going to put that out there.
So it's a great book. People should read it. She's amazing. She's like got a MacArthur fellowship grant, and she's really super smart, super nice also, by the way, and just like brilliant researcher. And she has a book that's really about sort of sticking to things and perseverance, and it's really wonderful. But there's a flip side to that, which you pointed out. So you have this question of, how do I deal with the ups and downs as I'm thinking about holding for the long term? And a big problem is, for example, if you look at March, right? Obviously there's pretty vertical downward trajectory. How do you figure out, can I persist through that? Is that just kind of a local thing that's happening, and I should have faith in the long-term trend that this is going to go up and know that this is temporary, or should I actually quit? And so I think this idea of persevering through difficulties is certainly important in terms of sort of sticking to your long-term plans, for sure. But we also need to think about these quitting decisions, because perseverance on its own isn't enough. So we want to actually calibrate. We want to think about grit and quitting is like the same thing. It's like two sides of the same coin, and we want to just figure out where we're supposed to sit on that. And I think that for people who are long-term investors, that can be really difficult, because there are lots of sort of local ups and local downs, and how do you sort of figure that out? So what I can tell you is that all of the research shows that if you try to figure it out in the moment, you'll be bad at it. So in other words, it's like something drops, 3% or 5% or something like that. You'll have some sharp downturn. And if you think you're going to be able to do a rational analysis of, what the expectancy is at that moment in time, you should sort of disabuse yourself of that idea. All the research says that that's a moment where you're probably not going to make a very good decision. And this kind of brings up this issue, I think, for investors, is that I think that we all kind of have this intuition that, well, I'm going to get this position on, but then obviously, when the world is telling me stuff and giving me information, that I'll be pretty good at figuring out what I should do once I get that information. I think we sort of all have that intuition, partly because when other people are holding something, we can see it much more clearly. And so we imagine that we could see that in ourselves. And it turns out we're actually really bad at that. So then the question is, okay, if we know we're going to be bad in the moment, if we know if we're going to make those adjustments poorly when we're kind of in it, then what are we supposed to do? And the answer is you're supposed to do this work in advance. And there's a couple of things that you can do. One is when you do put a position on, you can basically just say, when it reaches a certain strike price, I'm going to be done. And you could think about that on both the upside and the downside. So that's like a very simple strategy that you can use, but it's a pretty reasonable one, by the way. You can just figure out, what do I think the upper bound is for the stock, and what's the point at which it drops enough that I realize that my thesis was probably wrong. And you can think about that in advance with very clear eyes, and you can just say, That's the price at which I will sell, both on the upside and the downside. So that's actually an incredibly good strategy if you stick to it. So that's one thing that you can do. The other thing you can do is say, what are the conditions that could be true of the world that would make me want to change my thesis? So this is as you're investing, right? So what that requires is that when you invest, you write your thesis down, right? And so when you write your thesis down, you have to say, this is what I believe to be true of the world. And then you have to actually write down, here are the things that I think I'm going to see occurring in the world that make this a good investment. So you have to be very specific in what your thesis is. So you can't just have a thesis like, I think this sector is undervalued. That's not enough. You have to say why you think it's undervalued. So the example would be like, let's say that I'm investing in a stock. What I'm saying is that I think that I know something that the market doesn't know. By definition, that's what you're doing when you invest in a stock, unless you're indexing. Right. And then you're saying, I know only what the market knows, and I think the market has an upward trend. That's a totally different thing. But assuming that you're an active investor, when you buy a stock, I'm assuming you buy, or frankly, if you short, but when you buy a stock, you're saying, I know something that the market doesn't know. Okay. So say what that is specifically. As an example, maybe it's the market is pricing in that this company is going to produce 100 widgets in the next 6 months. But I think it's going to produce 120 widgets in the next 6 months. It's fine. So just write that down, right? So that's now making very explicit the things that you think are going to be true of the world that are causing you to decide to buy. So you're actually breaking your thesis down into kind of its component parts with a forecast of what might be true of the world. And then make a commitment. If those things aren't true of the world, then I should get off this position because it means that my thesis was wrong. And what tends to happen is, like, let's say that you had this thesis that was going to produce 120 widgets. It's really easy for you to rationalize, right? Like, so it produces 95 widgets and you go, yeah, but it was COVID. That would be like the best example. So you have to actually commit to these things and say, what do I think is going to be true of the world? And what would have to be true of the world? What would be the signals or the signposts that would tell me that this isn't going the way that I thought? And if those things occur, what can happen in the world that will tell me it is not going to produce the number of widgets that I believed it would? And when that happens, I must sell. That's like your exit sign.
Mm-hmm. So I love this example because I feel like so many people let's say in January 2020, they're looking at their portfolio, like doing the same thing that you're saying. Like, okay, I think that this company is going to make 120 widgets. Here are all the things that are happening in the world. And they missed COVID. Like how should investors think about when they're doing that? And yet they may have missed a black swan event. I mean, right. How much leeway would you give in that decision-making process when you're like, I missed that. So how much should I, where I'm going with that? Yeah.
So, I mean, the question is always, and this is the big problem we have when we decide under uncertainty. Is this really a particularly unusual event? Or am I just rationalizing? So right. Generally it's going to go into I'm just rationalizing. But obviously with COVID, it's a particularly unusual event. And then the question is just a new one, right? Which is you must make a forecast of what you believe that the world is going to look like in the next month or the next year. And you have to kind of decide that. Now, I will tell you that one of the best strategies for getting yourself to think about it more rationally is to sell all of your positions. And then buy back the ones that you feel make sense. Why is that? Because it's easier once you've actually gotten off the position and you sort of move that onto your balance sheet, not your balance sheet, but your actual P&L, to actually make a fresh decision about it that makes sense. So I'm not talking about panic selling, right? I'm saying some new thing has happened in the world. It actually sometimes makes sense to just sell all of your positions and then just say, okay, what do I want to buy? What is my thesis? Let me think how I want to allocate this capital. And you may actually rebuy positions that you had, but you'll be more rational about buying those positions. So that is one strategy that you can use. Another strategy that you can use is say, I don't have enough information, and so I should just hold. That's another thing that you can do, right? Is like, I don't know enough. And then you can just basically go and say, like, how long do pandemics usually last? Like, or you can actually sit down and do this and basically say, what are the signals that would tell me that things are going to continue to go down versus what are the signals that might tell me that things will start to recover and go up? And you have to start thinking about that. But those kinds of problems are extremely hard. I can tell you, for me, my strategy was just the hold strategy. I just said, I don't know enough to feel like I should sell here. And I've got enough of a long-term horizon that I don't think that I need to do anything about it. But that's just because my horizon is incredibly long. But I will tell you, the sell all your positions and start over is pretty good. You just want to make sure that you do it quickly, right? So if you're going to sell all your positions, you want to be buying back very quickly, because that's the whole point of it is okay, now let me think, I've got all this capital now, what do I want to allocate it to, right? So that's a way, for example, that you could look and say, well, given that COVID exists, what are the industries where I don't need to worry about the uncertainty of COVID, because the industry itself is actually going to be pretty robust under these circumstances. So it might cause you to, for example, move more into the tech sector, as an example, which does very well under COVID, and move out of sort of more hard assets. Or you may say, I think the hard assets are going to be like super underpriced, right? And then the question is, what is the point at which I need to buy it before the world realizes that? And that would be a completely different question. But now notice that you're going to be thinking about those things much more rationally, because you don't actually own the positions, which is super helpful. It's a weird strategy, but it works.
My mind's kind of blown right now, because it makes a lot of sense, just like get off the hide.
Well, you can see, like, there's a big difference between would you buy this stock today? And the problem is that if you try to do the thought experiment, would I buy this stock today? And this is kind of the problem that I'm saying of when you're in it, you aren't going to do a good analysis. So if I ask you to do the thought experiment of would you buy this stock today, it's not going to be a particularly good thought experiment. But if I make you sell the stock and then I say, would you like to buy it back? Now I've actually gotten you into the thought experiment. So it's actually a pretty reasonable thing to say, which is, I'm just going to get off my positions. And then within the next week, I have to reallocate that capital in some way. What do I want to reallocate it to?
Right. No, it's so interesting, because most people would do they would ask themselves the first question, well, would I buy it at, would I buy it at this price today? And I mean, most microcap investors who are in it and know the story inside and out might say, well, but
then prove it. Yeah. I mean, that's the thing. Like, then sell it and prove it to me that you're going to buy it back. So this is something that Daniel Kahneman calls being in the losses. We're just not good when we're in those states. And so what happens is, when you try to run that thought experiment, it's just really too easy for you to come up with rationalizations as to why you would buy it, because what you're really answering is, do I want to hold it? And the problem that we have, is, particularly if it's a losing position, is that as long as we feel like there's enough volatility available that we could get to a win, that we could get out of this state of losing, we're going to find a way to hold, because we're going to seek out the volatility. And the only way for us to get even is if we still own the stock, right? Now, what's interesting is, on the flip side, is that if, let's say, COVID hits and you have a stock that you want a whole bunch to, and then all of a sudden all of this uncertainty hits, and I say to you, would you hold this stock today? Your answer is probably going to be no. Why? Because you want to turn that realized that paper win into a realized win. So we have an asymmetry. So when you're on the loss side and you run the thought experiment, you're going to find a way to hold, because that gives you a way to get to even. Because we're not thinking about it as a portfolio. Now we're thinking about a single stock, and we're in the losses on that stock, right? But on the winning side, we tend to sell too quickly. Okay, so this is what I'm saying, that calibration between sort of perseverance and quitting, right? Or pivoting or selling, or so buying and selling, holding and selling. So now we know this, we have this asymmetry, right? We're going to find all sorts of reasons to say, no, we wouldn't buy it today. The world's too uncertain, COVID, who knows, blah, 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 blah. I'm just going to cash out. I'm going to lock in my profit and that's going to be it. And on the downside, we're going to come up with all these reasons why we would, of course, hold. It's undervalued now. The market has overreacted to COVID. So now you're going to get like all these other answers. Well, on the winning side, if the market's overreacted to COVID, you should obviously still hold it too. Like what holds for the winning positions holds for the losing positions in general as well, assuming that they're in the same sector. So that's why if you just sell everything and start fresh, now you've turned anything that's paper, whether it's a paper gain or a paper loss, into a realized gain or a realized loss. That gets it off your mental balance sheet. So that now as you're going in, now you say, okay, now I have to reallocate this capital. And now you're actually answering the question, would I buy that stock back?
What else is a good time to do that? I mean, look, I don't know. Hopefully we don't experience another pandemic or another March 2020, but I figured this might be something that maybe some investors on here who are just feeling like they're just in a lost, like, I've done so much work and I keep picking losers. Like, why? When else is a good time to maybe think about this strategy?
Well, so you can take the strategies to the extreme. Certainly, I know that there was at least one fund that did it every quarter period. Okay, so you could take that strategy that once a quarter I'm selling everything, and then I have to start fresh. So that, or once a year or something like that. You could. That's certainly a reasonable strategy, assuming that you feel like you're winning. If you have fees, obviously, if you have fees, you have to feel like you're winning to the fees. I can tell you that if you're in the middle of something like COVID, you're winning to the fees by getting it off your balance sheet, because you're going to be so irrational that you'd be willing to pay for the opportunity to start fresh, to get the fresh start. So you could take that strategy, like I'm going to once a quarter or once every 6 months or once a year, I'm just going to sell everything and then reevaluate. You could do that. But I think that when you're really on tilt, you sort of have two choices of things that you can do. One is you can walk away and say, I'm just not going to trade anything for a period of time until I can come back feeling like I'm fresh. And then the other choice would be this, right? I'm just going to sell and start fresh. And the reason, I think that part of the reason is that, so the issue with tilt is kind of twofold. And this is why I say, like, you could either say, I'm not going to trade anything for a while. I'm just going to hold those positions and assume my opinion is crap right now. Or I'm just going to sell and then come back, and that will give me a fresh start. That's the other thing that you can do. So the problem with tilt is obviously you have some sort of streak of bad luck. Like, the point that I was making in that TED talk that you mentioned is that part of the problem that we have, and this is why that kind of selling strategy is good, is that there's all sorts of ways for us to fool ourselves that the problem is risk and not expected value. So what do I mean by that, right? Like, well, when you live in a world that has volatility, you always have this opportunity to say, I lost not because my expected value was negative, but because the world was unlucky to me, or I experienced the downside. So this is, if you're grinding like 52, 48, kind of edges, then what's going to happen is that you can get on a streak where you just lose a lot in a row. And now you're sort of faced with this problem, right? Am I losing because my expected value is negative, or am I losing because I'm unlucky? And the problem with that is that for identity reasons, we tend toward the latter. That's the self-serving bias, right? It's, I'm going to blame risk as opposed to expected value, which is what we really like to do. The issue, though, is that when you blame risk, it puts you on tilt when you've had a losing streak. In other words, you feel like the world is sort of treating you unfairly in some way. Like, why did I come out on the 48% so many times in a row? Right? Like, that doesn't feel fair. So it's like, it's a double-edged sword. I get to preserve my identity in terms of feeling like I'm winning to my decisions, but I also go on tilt. Okay, so that's the issue. So now we have sort of two problems with tilt. One is that when you're actually in tilt, in the middle of being on tilt, you're going to make pretty poor decisions. So that's what we've been discussing. But the other issue is this, is that once you get to a level of loss that you couldn't reasonably make back in a short period of time, it's going to cause you to be a volatility seeker. In other words, you're going to be taking on what I would call the appropriate volatility to get you even in a short time, which doesn't mean that that's a good decision. So I'll give you the example from poker. So let's say that I'm playing a version of poker that's like limit poker. So in limit poker, we kind of know what the upper bound of what you can win is. If you have a really, really good session, you'll be in the 30 big blind range. So if I was playing like 50 and 100 limit poker, like a big win would be 3,000, and a spectacular win, like one of the best days I would have, would be 5,000. Right. Like that would be way out at the tails.
Right.
Okay. So we kind of know that just because the betting is limited. So now what the problem for me, if I lose more than $3,000, is that even on a good day, if I come back the next day, I can't get even to it. Now, I of course, it's one long poker game, but that's not the way that our minds think. We think in periods, right? So that's why, like, we evaluate things by quarters and things like that, right? Like, how'd you do last quarter? So now if I come back the next day and I've lost an amount the day before that I can't reasonably win back if I do well on that day, I'm going to be in the losses. I'm going to start off in the losses instead of starting fresh. That means I'm going to start off on tilt, and I'm probably going to do one of two things. I'm either going to play a style that increases my volatility. In other words, when I have a choice between playing a line on a hand where I bet a ton versus a line on a hand that's smaller, I'm always going to be leaning toward the big line, which isn't, sometimes that's right. But again, it's a calibration issue, right? Like sometimes I want to play a big line. Sometimes I want to play a small line. I'm going to lean always toward the more aggressive, toward the bigger line. If I have a choice between playing a hand or not playing a hand, I'm going to lean toward playing the hand because I have to be in the game. I have to churn money through that to try to get my money back. The other thing I might do is say, this game that I'm playing in isn't big enough. So if in this game, a big win, if I play 50 and 100 again, and I'm trying to get $5,000 back, that's really hard. That's like two or three standard deviations away from the mean. Like, how am I supposed to do that? So now I'm going to go play 1 in 200. I'm going to find a bigger game to play. And then boom, now all of a sudden, 1 in 200, a good day, I can get $5,000 back pretty easily, right? Like that's a reasonable day. Now I'm sitting more in the realm of normal distribution, right? I'm not sitting so far out at the tails. So that's kind of the twofold problem with tilt. It's not just the decisions you're making in the moment. It's what's happening when you come back the next day, if you've lost enough. So that's why these two strategies are pretty reasonable, right? The one strategy of walk away and don't even look at your P&L, don't trade for some period of time, enough for you to calm down and get a reset so that you can start fresh and not feel like you're trying to get your money back from something that's happened recently. That's one way you can do it. The other way you can do it is to sell everything. And that automatically gives you the fresh start, right? You're starting new. And that's what we're trying to do, is get ourselves into these resets where we don't feel like we're trying to get something back from the day before.
That's a lot to take in, and
I'm sorry.
No, it's great. No, don't apologize. I'm just kind of like, but so in the interest of time, I wanted to get to another topic. And I'm going to wait for the dog to start barking. Okay, stop barking. Here we go. So
I'll try to give shorter answers now.
No, don't worry about it. Just go. This is so much fun for me. It's just keep going. I love it. But so my next topic I wanted to cover, that's been it's really interesting in the microcap space, because there's this idea that you've talked about in every one of your talks, this idea of tribalism. You specifically talk about it in the Google talk. And I loved everything that you said in here, but I wanted to kind of apply it a little bit more to, what we see with microcap stocks, where for example, there's been a couple microcaps where many very smart investors that I know invested in a company that has done quite well. They invested in 2013 and now it's NASDAQ listed, well over 100 bagger, like made a lot of people a lot of money, while other very smart investors that I highly respect, I know, either sold too early or never took that position, and what I'm seeing, I mean, this isn't just related to microcaps anymore. You're seeing this with a lot of, mega cap names where it's just that tribalism of, you're believing in the founder and CEO. So, I was so curious into the decision-making process around, buying into that, either buying into it or not buying into it, and that thought process.
Yeah.
How do you think about that?
Well, so I think that we need to think really, so I think that, again, the thing about tribe, in the same way as we think about quit versus grit, or overconfidence versus underconfidence, or any of these things, is that these things are always two sides of the same coin, right? And we need to think about that intentionally, go into it intentionally and say, what are the good things and what are the bad things? And how can I think about how I can capture the good stuff, and not essentially fall prey or become victim to the bad stuff that goes with tribe. If you want to talk about like the strongest tribe ever, like Bitcoin, like that's a tribe.
I had a question about that later too.
Well, it's really, really tribal. So the issue is that tribe can both help your decision-making and hurt your decision-making. So where tribe can help you is in actually persevering in things that are hard, right? So we know that there are certain things that are really hard. As an example, like eating healthy is hard, right? Because sugar is yummy. And if you can get yourself into a tribe of healthy eaters, that's extremely helpful for actually sticking to it. The people that are around you, and sort of tying your identity to that is super, super helpful. And this is true when it comes to certain truth decision-making things, like being a truth seeker and being willing to admit you're wrong, and really trying to see things from the possibility that, like, for example, it's really hard for people to do what are called pre-mortems, which is imagining that you failed in advance. So imagine I take a position because I have a particular thesis on that position. And this is something that people should do. And I imagine it's a year from now. And I've sold the position at a big loss. Right. And the question is, why did that happen? Right. And then you sort of think about why that is. You can also think about this on a macro level, right? Which is like, you could imagine a different type of failure. Like, I sold a bunch of positions and it turned out that I should have held them. Why do I think that happened? So that would be another way to sort of imagine the ways that you might fail in the future. Well, those things are really hard to do, but they're better to do if you're in a tribe of people who do those kinds of things, right? Who really support that type of thinking and are willing to poke around at theses and try to figure out why you're wrong and look ahead and imagine the ways that you might fail. Because if you imagine the ways that you might fail, you're much more prepared for them. You can find really creative hedges. You can find really creative sort of out of consensus theses through doing these kinds of pre-mortems. They're good to do, but they're hard because they're imagining your own failure. That's a place where tribe is good, in the same way that it's good for not eating cake. Where tribe is really bad is that, and we can see this in politics, is that tribe can really short circuit your thinking. That once it becomes part of your identity, what ends up happening is that it's very hard for us to let go of the beliefs of the tribe, because we'd have to let go of our identity. And that's really hard to do, right? I really recommend, actually one of the cool places to sort of see this is if you watch the Michael Phelps documentary, The Weight of Gold. You can see what happens when that identity is so tied up in the things that you're doing. And this is true of beliefs as well, right? Like, who are we? What is your identity but the set of things that you believe? And then when you cohere around a very strong belief, right? Whether it's, you can see this in the value and growth battle, right? It's like the Jets and the Sharks. They're practically having like a gang war on the streets of New York over growth versus value. And it's like, well, why is that? Like, right? Because one would assume that neither is 100% correct, and it may be conditional on the environment that you're trading in. So there might be certain market environments where a value strategy makes a lot of sense. There may be certain market environments where a growth strategy really makes sense. And it's probably a mix. It's probably not one versus the other. It's much more complicated than that. But you can see this dividing up into identities that can really hurt your really hurt your decision-making ability. And then one of the things that it does is it causes actually too much grit. It causes you to persist in beliefs beyond the point at which the world has told you that you might want to let go of those beliefs. So here's the thing that I think people need to realize is, particularly when you talk about an example, like there are people who buy a stock and then it's a hunter bagger, and there's other people who sold it at other times, and there's other people who maybe didn't buy it at all. Anybody who has a really good trading strategy, this I will tell you, this is 100% certain. You will sometimes reject opportunities that end up being really good. I guarantee it. I will guarantee that to you. You will sometimes sell something where in retrospect you feel like you sold it too early. And you will buy things that end up being dogs. It's literally, I can guarantee you that's true. Why is that? Well, because you're deciding under uncertainty. And to not recognize that in advance is, and then use that in order to say, I did this wrong, or I did whatever, that's just resulting, which is something I talk about a lot. The fact that somebody bought a stock and it ended up being a 100-bagger means very little to me as to whether they're actually a really good trader, in the same way that someone who chose not to buy that stock and missed the 100-bagger, that doesn't mean anything to me about whether they're a bad trader. I need to see their whole strategy. I need to see their whole portfolio. I need to see what were the opportunities. Like for the person who bought the stock that ended up being so amazing, what could they have allocated that capital to? I don't know. But here's an example. If someone had 100% of their money in that stock, and they won to it, I know they're a bad trader. I don't need to know anything else, right? Because they haven't spread their risk. That's just ridiculous, right? So I don't even need to know anything else. So I don't have the details. I don't know when the person doesn't buy that stock, what did they allocate that capital to, right? If I don't have all of that context, if I don't understand what their process is, if I don't understand what their long-term performance is, I don't know what it means, and I don't understand why you would cohere around a tribe that is anything other than what I just said, which is we need to understand all of these things in context, and we need to understand, of course, we're going to miss good ones and we're going to buy bad ones. That's the whole point of deciding under uncertainty. One of the things that I say in this regard is that, so when I was playing poker, this used to happen all the time. Someone would be sitting next to me, and the board would come out and hold them, and there'd be like a 7-7 deuce on the board. And invariably someone would lean over to me and go, "Oh, I folded a 7-2." And I would always say to them, like, look, I was being snarky, I'm going to admit it. And I would say, there's a way to avoid that. And they would say, well, what? There is? And I'd say, yeah, if you play every single hand to the river, you're never going to say, oh crap, I would have made a full house. And they understood, like when I put it that way, they understood the absurdity of what they were doing, but it's just resulting. And this is the problem. And then when it starts to be sort of like a religion, like the people who bought that stock are now sort of part of a special group, and the ones who didn't are like the out group. It's like, how could that possibly ever be good for decision making? Because I guarantee you, for all those people who bought that stock that did so well, that if I dig into their history, I can find a whole bunch that did well like that they didn't buy. Right? So that's the problem with tribalism. So we have to think about, how can we bring tribalism into our decision making in a way that's good? And that's going to tend to be thinking about second order, right? Like, how can I become a good second order thinker, right? And how is tribalism going to destroy my ability to decide? And as soon as you start getting that sort of zeal, and one of the best signs for you that you're in a tribe is when you find out that somebody has taken a different action or holds a different belief than you do, and then you find yourself dismissing their opinion in general. And I feel that happening to me in politics. When I find out that somebody disagrees with me on some sort of core belief that I have, I'm not talking about something around morality. I'm just talking about something around policy. Right. I find myself getting that feeling of, dismissing all of their other policy positions or something, like now their opinion doesn't matter to me. And assuming that they're arguing with a good faith, which in politics, obviously, sometimes it's hard to find. But assuming that they are, there's no reason that all those opinions should be correlated with each other. So when I start to feel myself dismissing all of their opinions because I disagree on one belief, I try to check myself, because now I know I'm on the bad side of tribe. And so we really want to watch out for that for ourselves.
Absolutely. I mean, in when you were talking about tribalism, the one thing that I kept thinking about, and this is one of my favorite books of all time, is The Unbearable Lightness of Being by Mulan.
Oh, I love that book.
Like just that idea of just headiness and but also lightness, and
Yeah.
it's funny. I try and think about that a lot whenever I have a core belief. I'm like, do you believe that? What, you're going to stake. I always try and ask myself that question of will you stake your entire reputation on that core belief? And if yes, okay, then maybe it is a core belief. If not, well, why?
Right.
And it seems, and I try and bring that with everything that I try and do in business, especially in my interviews. I go in assuming I know nothing.
Yeah, it's a good place to do pre-mortems, to say, imagine it's a few years from now and you've changed your mind. Right, you don't hold that belief anymore. Why do you think that is? Right. It's just a good thing to poke around in yourself. What new information did you find out? What did the world tell you? Those kinds of things in order to try to sort of poke around in your own beliefs. I think one of the good things about if you wanted to see the dark side and light side of tribe, it would be some CrossFit people. So CrossFit is great because it gets you working out. So that's a good part of tribe, right? It creates community, it creates tribe, it gets you moving, you make sure you do it. The bad side is when CrossFit people laugh at people who are doing something else, oh, you do yoga or you're running. Oh, that's not really good. Of course, running is better than not doing. Why are you criticizing some other person's exercising program? Well, because your tribe has gotten a little too tribey. Right. So I think that's such a good example of how tribe can get you to do really hard things. Cause obviously CrossFit is hard and, it gets you moving and it gets you overcoming all of that inertia that we have. But then they start sneering at somebody who's, you do solid core.
By the way, I'm a total CrossFit bro. No, I'm just kidding. I'm not a CrossFit bro.
No, I mean, it's fun, but it's fine if you are. It's I think that on balance, CrossFit is good for people to do.
Oh, yeah. It's just changed so many of my friends' lives, but
it's when they start going, oh, you do yoga. It's just why are you criticizing what I do? That's what I choose to do. Live and let live. It's all good, right?
It's really funny, and this is totally off topic and anything, but I've just been noticing it recently. Is when people are saying, it's just my opinion, or this is my feeling, and putting it forth as truth, and
right.
it's something that I wrestle with because I'm you said it's your feeling and you said it's your opinion, and yet it's being conveyed this is the way the world is. And it's something I struggle with because I feel you're demeaning what it means to have an opinion and to have a feeling, that, and also not leaving it up to being questioned, because that's not, I don't know. How do you think about that?
Well, so I'm relating that back to what I said of when you invest in something, some sort of financial instrument, stock, that you're investing on, you're betting on your opinion. And so that saying what's my thesis? Let me take what's implicit in this decision to invest and actually make it explicit. Let me actually say what I think would have to be true of the world. Let me imagine what the signals are that could occur in the future that could cause me to want to get off this opinion, to get off this position rather. That all of that is reminding you that it's an opinion, that it's not the truth, right? That this is, in this moment in time, given the information that I have, this is my belief that this is a winning bet, right? And then I am now going to write down all of the things that are making me believe that this is a winning bet. And I'm going to write down all the things that could be true of the world in the future that would cause me to think that I should change my thesis or I should get off this bet or whatever. And boy, are you ever living in not confusing fact with opinion. You aren't. But this is a really big problem that we have as just in general as decision makers, is that we don't have a clear line between fact and opinion. And I think that particularly in the information environment that we live now, opinion is sold as fact all day long. And, I've had people say where I'll give them an actual literal fact. And they'll be well, you have a right to whatever you believe. And I'm no, I don't think you understand. This isn't my opinion. This is literally just a fact. Now, so someone may may turn out that that fact is wrong. Like if I say the atomic weight of hydrogen is 1, I'm not offering you an opinion. Now, maybe someday a scientist is going to come find out that that's actually, we were wrong about that. I suppose that could happen. But at least in this moment in time, this is a fact. I'm not offering you my opinion. I'm just saying a fact. And, there's all things, I think that we can see like a lot of this confusion of fact with opinion and politics into the wrong realm with like just something as simple as like, are you wearing a mask? Right. And just certain facts about COVID and the pandemic management. Now, I do think that that people can interpret data around lockdowns where opinion does matter, because there is opinion about economy versus lockdown. Now, I personally, my opinion and based on what I've read is that my conclusion that I've come to is the economy is the disease. Okay, so that happens to be me, but I understand why someone could hold a different opinion, but it's also a fact that a certain number of people have died, right? Like that's just a fact. It's not my opinion, right? So I think that that's where you can see like that when those lines start to blur, it can be bad on like a global scale. And one of the things that we really want to be really careful of, and this is something when I work with my clients, is that when we're in the investing world, we also blur those lines, where we have certain opinions about like market dynamics or how other people in the market are going to act, or or what's going to be true of the world, or what the fundamentals of a company are, where we have opinions about that, and we believe that they are facts. In the simplest way, like if we think about if you're thinking about like what's the strength of the CEO, that's an opinion. The facts are things like, what are they producing? When employers are saying how much their satisfaction is with that CEO, what kind of things are they saying? That would be a fact, right? That even though it's the employee's opinion, there's some sort of survey, and now you can look at that and you can understand it's a fact that those are their opinions, right? So you have inputs into your opinion about the strength of a CEO, but the fact that you're saying this CEO is very strong, that's not a fact, that's your opinion. And I think those are the kinds of things that really get confused, and we start to believe that they're facts. So we have to have really a distinction, because the fact is, pun intended, I suppose, that you need to, like, if you're saying, I think that this CEO is strong, what you want to do is say, okay, what are the dimensions? What are the sort of mediating judgments that go into my opinion about this particular CEO? Let me actually figure out what those sort of categories are that I think, and this is my opinion, what makes a CEO strong. So let me think about what those features are of the CEO. Then I actually have to rate those on some sort of scale of 0 to 5, right? Like, I've got to actually record my opinion. I've got to record the broad category of what my opinion of the strength of the CEO is in general. And then I have to think about what things could be true later that would cause me to change my mind about this particular rating. And now I've got like sort of a set of forecasts. These are the things that I believe to be true of this person that has caused me to come to this opinion. Some of the inputs into that are going to be facts. Some are going to be sort of mediating judgments. And then I can come that out, but then you don't confuse it anymore. Now you really keep it over in the opinion range. And what's really nice is that once you recognize something as an opinion, you become much more flexible about it. And you're more willing to change your mind than if you view it as a fact.
Very good. All right. So I think I might only have like 10 or 12 minutes with you left. So I have a number of questions that came in.
Okay, let's try to
Twitter.
Do some rapid fire here. I'll try to.
All right, here we go. Okay, here we go. How this might not be a rapid fire one, but this is a really good question from at petty_cash, Dean Trottier. What's up, Dean? How has decision making changed with so much more readily available information?
That's like such a good question, because I think the intuition is that people assume that that's made decision making better. Because you have so much information available to you. So in some ways that's true, because one of the big problems with decision making is that we only have partial information, right? So the more you know, it should be the better the inputs into the information. So that's the good part of it, is that we have access to a lot more information, and obviously our computing power and our ability to do data analysis and think algorithmically and have more sophisticated algorithms. That's all good stuff. The bad thing, and this is generally, and I think we can see this in society right now, is that the average person can only process a certain amount of information a day. And there's so much information coming at us now, right? Like all the time through like all these different social media channels and news outlets and 24-hour news and all this stuff, is that in that particular case, what happens, because we just don't have the capability, both time and processing power, to actually vet all of that information, is that you start to rely on proxies more. So it's like, basically it becomes who said it. So when I go back to that thing I said, like, I find that if I'll sometimes find myself, well, this person shares this belief with me, so therefore I think all their opinions are good, versus this person doesn't share this particular belief with me, so therefore I think all their opinions are bad, which I said was a bad thing. But that's what people do then. It's like, I can't deal with it. So if it's somebody I like who said it, then I just sort of agree with them, and I don't actually vet the information very well. And this is one of the reasons why misinformation spreads very well, because we just sort of stop this whole vetting process of, let me try to figure out for myself if this is true. And we're just like, yeah, someone I like said it. So we start to use proxies, like, okay, like, oh, I like this particular, reporter in the Washington Post, so I believe it's true. Which is sort of a bad reason to think that things are true. So it's like upside and downside, because there's so much information.
Yeah, you have to ask yourself, you're like, all right, well, this is the information. I'm getting so much information. At a certain point, you kind of be like, okay, I can't apply every single decision-making strategy to literally every piece of information that comes in to decide to help guide whether another decision I want to make or its validity or not. It's like, oh, okay.
Yeah.
That person
so
said
like,
it.
Yeah. I mean, like, just as an example, I mean, I think it's really easy to do this. Like, you should just sort of have a checklist for yourself. Like, how many sources have I heard say this? Is it just like an echo chamber of the same source, or am I hearing this like independently from different sources? So a lot of times, like, I'll see tweets where someone will send it to me, and I'll just say back, I'll say, I wonder if that's true, because that seems like it should just pass the smell test also. Like, doesn't that seem a little bit weird? Oh, I'd really like to see if this gets independently verified, that kind of thing. And for example, with what happened last week, there was a lot of stuff that got sent around that turned out not to be true. And then also a lot of things that was worse than what we thought was true, as you got more information. And that's a good reason that you should sort of hold your beliefs lightly. So there were a few things where I said, oh, I don't know if that sounds like that would actually be true, that turned out not to be. And others where I said, oh, I'm not sure, I'd really like to see more evidence. And then more evidence came in and I realized it was true. Right. So I think that we need to just sort of have a checklist of what are the things that I need to know in order to believe something is true, so that I'm not just like kind of using proxies and just sort of like recording information, because it's hard to undo those things once you believe them.
All right. Okay. So I got two quick ones that go back to your poker career that I think will be really fun. So this is from at TSOH_investing science of hitting. What up, Alex? He asks, what is your most memorable experience at the card table? Oh, this might not be a quick hitter, actually.
No, it is. So I'll give you two really quick ones. One would be, certainly, like, I would say like winning the Tournament of Champions for sure against Phil Hellmuth. So that would definitely be it.
I rewatched that, by the way, right before we got on. I was like,
oh, cool. Yeah. So that was definitely it. And particularly the most memorable thing was I had a hand where he folded and I only showed him one card, and it really got him upset. And he actually called me like a week later and said, Annie, I have to know what your hand was. It was a situation where I had kings and nines, but I only showed him the 9. And it really like put him on tilt. And then he was like begging me to tell him what the other card was. And I was like, you'll find out when everybody else does on TV, Phil. So that was fun, just to like needle him. The other thing that I'll say, because people won't know this one, this is very funny. I was really, really pregnant, and I was playing a cash game against in a game that my brother was in. And I won't give the details of the hand, but my brother really, what we would call, butchered the hand. So there was a hand where I started off with like, I'm a humongous favorite, and I continued to be a really huge favorite. And then he hit like, like a 2% or something like that, or a 4% on the river. And he put in way too much money on the hand. He really played the hand poorly. And I'm like, I think I was like 8 months pregnant or something. I mean, I was very pregnant. He played the hand so bad that my friend David Gray said to him, "Oh, by the way, I could have pulled any tourist off the strip, brought them in, had them watch that hand, and they would have known she had you beat. You're such a fish, Howard." So anyway, I was pregnant and quite hormonal. I just want to say that. So I picked up a stack of yellow chips, which are thousands, because I was so mad. And by the way, I never did. This is the only time I ever did this. Like, I was a very calm person at the poker table, but I was very pregnant and I was pissed. And I took the chips and I threw them against the wall of the Mirage. We were up at the one table, so it was in the corner. And I looked at my brother. I said, "Pick those up." And I walked out of the room. The next time I came back to play, I sat down and my brother was in the game. And we never spoke of this. We've never spoken of this. He just took this stack of chips and slid it over in front of me.
Wow.
And that was the end of it. And it's the only time I've ever had an outburst in a poker room, but it was that. And it was because my brother was such a donkey. So there you go.
Oh, that's so good. Okay, here we go. Your final question before I let you go. This is a really good one too. And this is from @Joe S. Gerard. He asks the 3 easiest tells of most amateurs. What are they?
Sure. Yeah. So strong is weak, weak is strong. So if they take their chips and they really like pound them in with force, that usually means they're pretty weak. And if they sort of gently like slide the chips in, that usually means they're pretty strong. So if they're like, like this, you should really worry about it. So that would be number 1. Yeah. So number 2, this is really important, is that people mistake when someone how someone will shake their leg up and down.
Yep.
People mistake that as a sign that they're really nervous, but it's actually a sign that they're excited. It's like a dog wagging their tail. So when you see someone doing that with their leg, it usually means that they're pretty excited about their hand. And then the last thing I'll say is, like, you always kind of want to know if someone has a tough decision or not, because that tells you something about their hand. And you can just look at speed. You should be really paying attention to flow at the table. So how quickly someone is acting will tell you a lot about what the quality of their hand is. Someone calls really fast, it means they have a pretty easy decision, right? So it means it's a hand that they don't have to think about raising with, and a hand that they don't need to think about folding with. So that actually tells you, that's actually a really big tell that people, professional poker players really care about, but other people are looking for like blink rate and things like that. Just notice what's the tempo. Like the tempo is such a big tell.
Gotcha. One quick story. My first time ever playing a cash game in Vegas it was after a night out. I remember I had like a suit on and everything. And it was a lesson that I think I carried from that was like, be who you want to be more or less, because I was like, all right, I'm going to go into this game. Listen, I'm still building my wealth. I don't have a pot to piss in, but I'm going to go into this game like I have no regard for how I'm going to play. I'm just going to completely make everybody totally confused. And that's my game plan. And I went in and I did well. And I remember
that's actually a very good strategy, by the way. The only issue with that, so that strategy works really well for the first few times,
right.
But not if you're playing against bad players. By the way, if you're playing against players who are lower, that's actually just a great strategy, period. If you try to rinse and repeat that against experts, it'll work in the beginning and then it won't. Obviously, it's like any market, it'll adjust to you. But actually and then I have to go, one of the big complaints that I used to get from people is, don't you hate playing against players who don't know what they're doing? And my response was always, tennis, death match. Are you playing against a beginner or someone who's actually really knows what they're doing? And they were always like a beginner. And I said, so then you should like to play against a beginner in poker too. So think about what you're doing that isn't counteracting somebody who's doing that. So it turns out that a lot of the normal strategies don't work well against somebody who is playing like you, which is why it's such a good strategy. And people get stuck in their beliefs about what makes a good poker player. That's the problem. And so they don't actually adjust to what you would be doing. Right. So that's why it's such a good strategy, because people kind of get stuck in their idea of how you're supposed to play poker. So it's actually brilliant. And you should do that every time you go and play poker.
And that was a metaphor as well, everybody. Okay. That's a metaphor for life. If, think outside the box, of course, but with that, soon to be Dr. Annie Duke, Thank you
Thank
so
you.
much for joining me today. Where can people go and find more information on you, buy the books, everything?
Yeah, so there's a few places. One is you can go to my website, annieduke.com, and you can find out lots of information there, get links to podcasts and stuff that I've done. I'm on Twitter at Annie Duke. And then also, I would love it if people would check out the Alliance for Decision Education. It's a nonprofit I founded trying to bring decision education, the kind of stuff that I've been talking about, into K through 12 education in the same way that kids get social emotional learning now. We really feel like less trigonometry, more decision education would be way better, so that people can figure out what is true and what they're supposed to do about what's true. And I feel like that's really lacking in education now. So if people get, it's the Alliance for Decision Education.
I had one question like kind of around that too, and I didn't get to it. Do you mind if I ask it 2 seconds? Is that okay?
I can't. I have a podcast
Okay, next
literally
time.
at this second. So
Next time.
anyway,
All
this
right,
has
Annie,
been so fun.
thank you.
Yes, next time. Let's keep in touch.
I really appreciate it. Thank you so much, Annie.
Okay.
Really appreciate
All right. Bye-bye.
Thank you. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.